So when the light's on, the mic is on. When the
Okay, good morning, everyone. The first order of business is to call the meeting of June 10th, 2021 to order. Item number 2 on our agenda is to approve the minutes of the meeting of May 13th, 2021. I have a motion and a second. Please record your vote.
Mr. Culver, were you able to log in?
No.
How would you like to vote today? On the-
Item passes. Item number 3 is the consent docket. We have 2 items. We can approve those with one motion. I have a motion and a second on item 3. Please record your vote.
Trustee Culver, how do you vote?
Item passes. Item number 4 is to ratify approvals. We have 2 items. We take those with one motion. A motion and a second on item 4. Please record your vote.
Trustee Culver?
Item is approved. Item number 5 is to approve the claims docket. I have a motion and a second on item 5. Please record your vote.
Trustee Culver?
Item is approved. Item number 6 is approve the following applications for service retirement. I have a motion and a second on item 6. Please record your vote.
Trustee Culver?
Item is approved. Item number 7, receive report of death, authorize payment of the $5,000 death benefit, and approve continuation of pension to the spouse. I have a motion and a second on item 7. Please record your vote.
Trustee Culver?
Item is approved. Item number 8 is receive report of death, authorize payment of the $5,000 death benefit, and authorize secretary to make necessary changes to conform on the following. I have a motion and a second on item 8. Please record your vote.
Trustee Culver?
Item is approved. Item number 9, receive report of death, authorize secretary to make necessary changes to conform on the following. I have a motion and a second. Please record your vote.
Trustee Culver?
Item passes. Item number 10 is to approve the request of the following to terminate vested rights and commence retirement benefits. I have a motion and a second on item 10. Please record your vote.
Trustee Culver? Trustee Ames?
Item is approved. Item 11 is items for individual consideration. Item 11A is approve the retention agreement with the securities firm Labaton Sucaro to represent Oklahoma City Employee Retirement System in prosecuting securities class action to recover losses sustained by the system and other class members as a result of investments in Array Technologies, Inc., and authorize the chairman, the director, and the municipal counselor's office to review and execute and deliver any documents required in pursuit of the litigation, including documents necessary to act as lead plaintiff in the litigation, required certifications, and required discovery materials. Wiley, would you like to expand on this a little bit, please?
Yes, Mr. Chairman and trustees, Wiley Williams from the City Attorney's Office. We've been asked to participate as a lead counsel in litigation against Array Technologies, Inc. For losses that have been estimated at $277,000 for ERS's purchase of stock. The company, Array, is manufactures tracker systems, which are devices that are attached to solar panels that move the solar panels so that the maximum exposure to sunlight is done. And it's in these big fields. You see them in Texas and Arizona and New Mexico. There'll be acres and acres of these things that produce electricity. And they offered an IPO in December of 20, and they've offered 2 other sales of their stock. Insiders in the company sold their stock at that time between $22 per share and $35 per share over that about a year time period, and we bought a lot of that stock. They failed to disclose in the IPO that they were experiencing huge increases in the price of steel and other manufacturing equipment to make these trackers. And as a result, their stock prices fell when it was revealed that they knew about it and didn't disclose it, down to $13 a share. And so we sustained a lot of loss. And Labaton Sucaro is ready to file a Securities Act and a Security Exchange Act litigation and would like us to participate as lead counsel. And since our losses are so high, I would encourage the board and trust to do that.
Does anyone have any questions? Hearing none? Yes, sir.
It was in December of 2020.
Yes, in October and December of 2020.
Could they argue that it was, I mean, what are the chances of actually succeeding in this fight? Could they argue that it was across the board with all the industries and we saw prices of steel and lumber go up everywhere?
That will come out in the litigation, I'm sure, what their defenses will be. It's just, this law firm specializes in doing Securities Act litigation and is in the process of discovering these things. I think their point is they knew about the increase in the prices when the stocks were being sold on the insider basis and did not reveal that,
Yeah,
therefore inflating the price of the stocks.
yeah. Okay, thank you.
Any other questions?
Any other questions?
Hearing none, Chair will entertain a motion on item 11A. I have a motion and a second. Please record your vote.
Trustee Culver?
Item is approved. Item 11B is to approve sending attendees to the Oklahoma Public Funds Trustee Educational Conference, September 29th, 2021 through October 1st, 2021 in Afton, Oklahoma. I have a motion and a second on item 11B. Please record your vote.
Trustee Culver?
Item passes. Item 11C is the Oklahoma City Employee Retirement System budget for the period of July 1st, 2021 through June 30th, 2022. Does anyone have any questions regarding the proposed budget for the ERS office? Here, Chair will entertain a motion. I have a motion and a second on item 11C. Please record your vote.
Trustee Culver? Trustee Williamson?
Item is approved. Item 11D is the agreement between the Oklahoma City Employee Retirement System and the City of Oklahoma City regarding the city's obligation to provide certain professional and non-professional services and office rental to the Oklahoma City Employee Retirement System, and for the retirement system to provide certain professional services for the retirement system to provide certain professional services for the city, period of July 1st, 2021 through June 30th, 2022. Total estimated cost of $104,581.04. Any questions? I have a motion and a second. Please record your vote.
Trustee Culver? Trustee Janata?
Item is approved. Item 11E is the Administrative Services Agreement with the City of Oklahoma City to provide administration of the 457 Deferred Compensation Plans and the Money Purchase Plan and Trust, number 8751 and number 7697, for the period of July 1st, 2021 through June 30th, 2022, estimated revenue of $44,000. Anyone have any questions? I have a motion and a second on 11E. Please record your vote.
Trustee Culver?
Item is approved. Item number 12 is to receive the investment consultant report. Item A is the monthly investment report. Good morning, sir.
Good morning. Good to be back again. Trustee Janata, good to see you in person. I think this is the first time we've both been here together in person. So just a brief update this morning. You should have the May monthly update in front of you. As you can see, the total fund stands a little under $1 billion. We're coming on the cusp of that $1 billion number, $923 million, as of the end of May. In terms of the asset allocation, we're continuing to be slightly over equities at 67% relative to the target at 65%. You did increase your target from 60 to 65% at the beginning of the year. We lowered the fixed income target, really in light of, despite how robust returns have been over the last year through the end of May at about 30%, and I think as Trustee Thurman was pointing out, probably at the end of March, it was closer to 40%. But that was really from the trough of the bottom in March of last year through that 1 year period, so a little bit deceiving. As we've talked about, our forward-looking expectations are much more muted. You've done a good job of being cognizant and realistic with respect to your return expectations and lowering that return assumption that is used for discounting your liabilities and what your real target return is down to 7% today. So over the next 5 to 10 years, even that 7% we think will be challenging just in light of where we've been. But longer term, it's a much more realistic objective. That overweight to equities of about 2% is primarily in domestic equities, U.S. large and small cap. We also made some tweaks within equities and increased private equity from 5 to 10%. So that underweight in private equity, it's going to take some time to get that to the target because of the way private equity is put to work through making commitments to funds that call down capital over time. So we will continue to see the large cap and small cap be a little bit overweight relative to their targets within the asset class. But the biggest dispersion is between equity and real estate, because real estate also acts much like private equity, and we're about 5.5% underweight there. You have made a commitment in the opportunistic real estate space to Starwood Capital Partners. It's a distressed real estate fund that will be putting capital work over the next 3 to 5 years. That's a $15 million commitment. None of that has been called yet, but we anticipate that will start to be called over the coming months. And then we talked about this last month. We did some proposed rebalancing into the Morgan Stanley Prime Property Fund, which is your core real estate fund. That is an open-end fund structure, meaning it has quarterly liquidity where you can come in and out when it's available. There is a bit of a queue to get in because they don't want to just take cash if there's not opportunities to put money to work. So you made an additional subscription of $14 million in May. Based on our discussions with Morgan Stanley, it looks like they're going to call about 75% of that by the end of September, and then the balance by the end of the year. So that will start to rebalance the portfolio back to targets. And then you have a little bit more cash than normal. So we're keeping a few months cash for operating needs and a little bit more to meet as commitments. These commitments to private market funds have picked up. That gives a little bit of buffer to meet those capital calls as they come in. Just looking at the second page, as I mentioned now, the year-over-year results for the trailing 1 year. This portfolio has tracked pretty nicely above your target index, really over the last year. As we went back and looked at it a couple months ago, probably January, February, March, we were tracking about 7% over the target index. So there was a lot of areas that were really doing well. We don't expect that over time, but still at the end of this 1 year period, on a net basis, the portfolio is up 28.6% relative to the policy index at 25.7. The policy index is what your asset allocation would suggest if you were passively implemented. But again, well above your 7% target. But if we look out longer term, 10 years, the since inception numbers going back to 2002, we don't have, the second line there in the blue is net of fees. We don't have net of fee returns all the way back that far because we started capturing that about 8 or 9 years ago because you actually pay fees, quite a bit of your fees out of a different account where you're being billed. We weren't capturing that going way back. We have been for the last 7 to 9, I think it's about 9 years now. That we'll be able to show 10 years of net performance, but it's about 45 to 50 basis points of differential there. So even over a 10-year period, if you look at that and say 50 basis points, your net of fee return over the last 10 years has been about 8.75%. So still well above where where you're tracking. Looking at those one-year numbers, where that relative outperformance is coming from, a few places, large cap, which is your largest allocation, at close to 25%. Really nice excess return, 45% relative to the benchmark S&P up 40. You're primarily passively invested there. We've got two strategies, an S&P 500 index that's going to track the benchmark at a very low fee of about 2 basis points, and then the Intech strategy, which is it is a benchmark risk-controlled strategy. They're owning a good swath of the index, most of the names in the index, but it's weighted a little bit differently. Their approach will overweight the securities within an index that have a little bit more volatility, which tends to be the smaller capitalized stocks in the index. So that's benefited over the last 6 months as we've kind of seen a rollover from what we saw in 2020, where the mega cap, really 5 technology names, the FANG stocks were really outperforming. Over the last 6 months, you've seen a much more wider breadth into value, more economically sensitive sectors, and smaller names. That's really helped that Intech strategy, which is up 49.5% relative to the Russell 1000, up 42% over the year. Small cap, as you look at the relative return relative to the index, trailing by about 6%, but on an absolute basis, it's still your best performing asset class over the last year, up 54%. Really what we're seeing there is the impact of the last several months. It's been pretty difficult for active small cap managers to keep up with the benchmarks. I think I've mentioned this at a couple of the meetings. Some of this Reddit phenomena, where a lot of these social media is pumping up names of companies that are heavily shorted and by institutional investors. A lot of those names are getting pushed up quite a bit through retail investors that don't have good fundamentals. Well, those names are in the index. And so the index is going up, and your managers, Earnest and Times Square, more fundamentally oriented, looking for companies with sound fundamentals, balance sheets, and expected earnings growth, they're not owning those. So by not owning those, they're not keeping up as much, but still up 54%. We have no issues or concerns with the small cap managers in the portfolio. The long-short composite designed to provide equity market risk mitigation, so to be up in positive markets, down less in down markets, about 65 to 70% of the market exposure. So we wouldn't expect to be up as much when stocks are just going up, but you're getting a nice return of about 25% over the last year. You'll see the private equity, a really big number for the last year, up about 43%. So your private equity portfolio, some of the older vintages, we've seen quite a few distributions back to you in the last year, but also quite a few write-ups. Just recently, Warburg Pincus in Fund 12, which is a 2015 fund, has a company in that portfolio that they haven't distributed back to you yet. They're going to be distributing back to you, which is going to represent about 5% of the capital of that fund. And they have it marked at about 5 times the cost of their original investment. And so that's being reflected in these returns. So pretty strong returns for private equity over the last year. Your non-U.S. developed, which is Lazard and Harding Loevner, very, very strong relative returns relative to the EFI. And then emerging markets have done very well, led by Wasatch on the emerging market small cap side. And as I think I mentioned, while not nearly the kind of returns you're seeing from equities, your fixed income over the last year from a relative return standpoint, you're up over 6.5%, where what we're comparing to in the policy benchmark is actually negative. So the Bloomberg aggregate, as rates have ticked up over the last few months, that's gone negative. So actually, year-to-date, the ag is down about 2% because we've seen rates go up so much. What we've done in your fixed income portfolio is we have a lot of other drivers of return other than just interest rate risk. You have currency, you have credit, high yield, bank loans, and other things that are driving returns. So a nice boost there on the fixed income side. And then finally, the real estate portfolio up 3.25%. No manager issues, as I mentioned, just as we hopefully get back to more normal times. We haven't really had managers come in a while, so maybe we can start to work to have some managers coming in at the balance of this year just to give updates. We will have, I think we're targeting for August, some additional recommendations in the private equity portfolio. A couple of funds that are in market today that we're working on, and then just forward-looking with managers that you're currently in. Warburg Pincus, the last fund that you committed to with Warburg Pincus was 2019. We expect them to be coming back with their next fund late part of this year, first part of next year, and then FirstMark, which is a newer venture fund that you've made commitments to. It indicates 2020. That fund was in the market in 2019. We anticipate they'll be back at the latter part of this year, early part of next year. So these are some things on the horizon, but I think at the August meeting we'll have some additional recommendations. But perhaps next meeting I can work with Regina if you have time on your agenda, and we can have one or two managers give updates if the board is good with that.
Okay.
Okay.
Anyone have any questions for Jason?
I just have one quick question. Jason, inflation seems to be happening right now. As far as a hedge or protections that we have in a portfolio, is that where we would look in our private equity real estate areas? Does that help us in those investments?
From a strategic, I think you said, first of all, I was hearing a voice and you can't really tell where it's coming from with masks.
Right here.
I figured out it was Marty after a while. From a strategic standpoint, the real asset allocation from a long-term strategic standpoint is really designed to provide a hedge against inflation while also providing a premium return to bonds and less risk than equities. So certainly, overall, long-term, the real asset portfolio does provide that. Your equities, overall, which is your largest allocation, target allocation of 65%, within equities, there's energy, materials, and other natural resource strategies in companies that your managers are investing in. So in a low to rising inflationary environment, we really think equities provide a nice hedge against inflation as well. What you don't have that some people might ask about is a direct strategic allocation to commodities. We did have that here. We've struggled with commodities, direct allocation to commodities for years. And a number of our clients at our recommendation did make strategic allocations, very small, in like the 2 to 5% range, coming off the last kind of major cycle in commodities. What we feel today is the volatility of commodities makes it very hard to have a strategic allocation there. So other components of your portfolio are a better hedge, and where the real assets, the equities, and within that, where managers can be a little bit more tactical and move in and out of those industries or sectors that will benefit. So we're comfortable with the amount of inflation protection you have in this portfolio.
Thank you. That's informative as always. Thank you, Jason.
Anyone else?
Thank you.
Thanks, Jason. Chair will entertain a motion to receive the report. We have a motion and a second. Please record your vote.
Trustee Culver?
Item is approved. Item number 13 on our agenda is comments from board, staff, and citizens. I would be remiss if I didn't congratulate Mr. Lawson on his election. Now he will be, if y'all remember, his initial term was to complete Regina's term, and now he'll have a full term of his own. So congratulations.
Thank you, Mr. Chairman, and I would also like to thank all those people that cast their ballot and put their trust in me to be here. I can't thank them enough for that. There were 2 other candidates on there that would have served up here just fine. But the fact that they put that trust into me, I'm just very humbled and appreciative of that. Thank you.
Okay, the only thing I have other than that is if you're planning on going to the Public Funds Trustee Education Conference, don't wait to let Regina know. Just let her know as soon as possible so she can make the arrangements for us. So. Okay. The next item is adjournment, and we are adjourned at 10:32. Thank you, everyone.